there's no money in the ETF. When the money comes into the ETF, it's going to steamroll everything because the amount of money that's likely to go into that ETF is going to dwarf all of the little traders trying to quote unquote front run that move. So I think the party's just getting started.
2 months ago, a U.S. judge declared that the decision by the U.S. Securities and Exchange Commission to allow Bitcoin futures exchange-traded funds while blocking ETFs that directly hold Bitcoin was arbitrary and capricious. This ruling is likely to compel the SEC to approve a spot Bitcoin ETF, as the alternative of retracting prior approvals for futures ETFs would be more embarrassing. The SEC's defeat in this case is seen as a significant development for Bitcoin, which has demonstrated a notable price correlation with the frequency of mentions. Since August 28, the day before the SEC's defeat, Bitcoin has gained $168 billion in market capitalization, marking a 32% increase over the period. This surge in value surpasses that of other assets like gold, which only saw a 3.7% gain, the Nasdaq Composite, which declined by 6.5%, and Ethereum, which registered a 14.4% increase. These gains are largely driven by optimism around U.S. regulators adopting a more crypto-friendly stance, with ETF excitement being a major contributing factor. Mark Yusko shares his positive outlook on Bitcoin and highlights the influence of market psychology in driving the uptrend. He further emphasizes that Bitcoin is an asset driven by the sentiment of the people.
I think the idea that suddenly people are saying, "Oh, we're back in a bull market." Well, again, we've been in a bull market for a year, and that chart that you showed, what's so great about it? It's a massive accumulation pattern. Now, there's two types of patterns in markets. There's accumulation and distribution. And accumulation patterns are a series of higher highs and higher lows. It doesn't mean straight up. Markets don't go straight up. They have volatility. They have ebbs and flows, and people get excited and people get afraid and greed and fear. But when overall there's general accumulation, you make higher highs and then you fall back, but you don't go all the way back to the previous low. You make a higher low, and then there's more accumulation. And the opposite happens in distribution. In distribution, you make a lower lows and lower highs. So it's like a ball bouncing down a set of stairs. That's a bad place. So you look at Netflix chart or even Amazon lately. There's a whole bunch of them that are definitely in a distribution pattern. And I think big tech is about to run into that proverbial wall on that. But Bitcoin is definitely in an accumulation pattern. And the whole idea of front running the ETF, on the margin. Okay, see how I did that? On the margin, yes, that is true. But overall, it's impossible because what I mean by that is, and the reason it's not amazing, the reason it's so great is what the dark blue, the lower chart is human emotion. And what the top chart is the Bitcoin price, which is driven by human emotion. Bitcoin's still young as a market, right? It's not mature like equity. So equities, if you go back and you look at previous bubbles, the 1929 bubble or the 1840s bubble, or when markets were very young and they weren't sophisticated and computerized and the machines didn't run everything, you could overlay this chart. Like if you overlaid the 1929 crash on this chart, it would follow it perfectly, precisely, including the return to normal kind of bounce after the initial drop. And then there's the straight down and the depression, anxiety, denial, all the things, the 5 stages. And if you looked at the 2001, 2002 crash, same thing. 2007, 2008, same thing. But now the equity market isn't human anymore. It's machines. There are no humans. You go to the New York Stock Exchange, there are no humans, right? Bitcoin's run by humans. It is mostly individuals. There's a few machines out there trading on the margin, Bitcoin is so human as a market right now. It's why we have something called the Risk Managed Bitcoin Fund. And what it does, it's either in Bitcoin or it's in cash, depending on the trend, like an old fashioned CTA, commodity trading advisor, and it crushes it. It lags in the up markets. It absolutely destroys it in the down markets. And over the long term, it wins meaningfully. And people say, that's just market timing. I'm like, yep, exactly. But in human driven markets, turns out you can market time almost perfectly using simple trend following analysis and a chart like this.
JP Morgan suggests that the recent surge in Bitcoin demand appears to be primarily driven by institutional interest. Although metrics like the Google Trend Score have remained relatively stable since the crypto winter, open interest in CME Bitcoin futures contracts, which are predominantly utilized by institutional investors, has risen to levels last witnessed in early 2022 before the FTX collapse. Furthermore, JP Morgan points out an uptick in on-chain transfers from smaller wallets to larger ones, as depicted in the chart below. Historically, Bitcoin tends to flow towards larger wallets when positive developments for institutions, such as the launch of the first U.S. futures ETF in 2021 and the significant event of 2020, are in play. This trend tends to reverse when issues arise. Hence, the recent increase in Bitcoin demand appears to be a preparatory phase for an ETF marketing campaign. As the act of buying drives the price upward, this preparation process becomes self-fulfilling.
People don't pay attention to, I don't think, is the fair value follows this Metcalfe's law model. We've had Tim on the show and he talks about it.
Get Tim back on.
It has little fluctuations when things happen, like, China bans mining and the hash rate declines. Well, yeah, that's going to have an impact on the network. Guess what? And then it comes roaring back. And now we're at new all-time highs in hash rate. And you'll have people flee and you get a bunch of wallets that disappear, but then they slowly come back. And now we have more wallets than ever before. And so the fundamentals follow this Metcalfe's law model. So, but the price isn't the value, right? We talk about this over and over in every asset. Price is a liar. Price is simply what you and I or two other people decide to exchange a small value of a good or service. That's the price. That's not the value. Right? The value of anything could be higher or lower. Right? That's when stocks are undervalued or overvalued, or bonds are undervalued or overvalued. Bubbles form. Right? There was a great. We do our weekly webinars, and we did the hedge with capital D yesterday, and Corey, one of my partners, had this great chart of the two big bubbles, the Japan bubble and the US stock bubble and the bond bubble. And they declined the same amount. It's like, well, that wasn't a bubble. Like, long bonds were in one of the greatest bubbles of all time because we took interest rates all the way to zero for 13 years. And everybody bought them. The banks bought them. Everybody bought them. And the price got stupid and the yields got stupid. And now that's changed. And TLT's down 50 some odd percent, fell the same amount as the Japanese stock market or the US stock market in 2007, 2008, global financial crisis. So bubbles pop. But the thing about Bitcoin is when it's below fair value, as it is today, it will drift. And what I say is fair value, again, according to Tim's model, about 50K. It's like 52, 53. I'm going to just round it to 50. And we're going to drift toward that number because we're out of spring. We're in summer, June to, June of next year. Then the halving occurs. Then we're going to go into fall. Now, what's fall? Well, fall is where people start to pay attention because the halving happens. And now the fair value actually goes up because now the price has to adjust to reflect the fact that the miners are getting less rewards. And he says, well, why does that have to happen? I'm like, well, it's just built into the code. And I think it's one of the mad genius things about the code is that you build in this mechanism that forces an increase in price because rising prices attract attention. And so then you get the movement, and we'll get back to fair value. And think about it, fair value will now be 100. Okay. Now we're going to drift back to fair value. Well, then what happens? it went from 34 to 100. Oh my God, I got to get in. And you have the FOMO, and then you get the parabolic move. And then we get above fair value, which sows the seeds of demise that you have to have another crash. And so this boom bust period.
Cycle of life, baby.
Cycles. And it's shorter than the norm. Like stocks have done this for 200 years. It's an 11-year cycle. And we messed it up with the QE era. But if you go back and you look at history, there's this 11-year cycle of the economic cycle and the business cycle and the Fed liquidity cycle. It's not rocket science. It's not voodoo. It's real. And the cycle in Bitcoin is shorter because it was put into the code. And and then humans are reacting to the code, and humans get super fearful, right, at the bottom, and they get super greedy at the top.
The SEC faces a January 10th deadline to respond to a joint application from ARK Invest and 21 Shares, with industry experts anticipating a quicker resolution. Grayscale and BlackRock have filed formal registrations for spot ETFs, leading to ongoing discussions between asset managers and the regulator regarding ownership rights. JP Morgan predicts that the SEC may issue mass approval notices to prevent any one manager from gaining a first-mover advantage. The benefits of a spot ETF, offering more direct ownership compared to synthetic funds, are acknowledged, but their revolutionary impact on crypto markets is seen as relatively marginal. Despite the hype around a US-listed spot Bitcoin ETF potentially revolutionizing institutional crypto ownership, historical demand suggests it might not be a game-changer for ETF providers. It's possible that the excitement will wane, and another Bitcoin halving event will capture attention next year. Peter Schiff's view that SEC approval could mark the end of the Bitcoin spot ETF rally has sparked speculation, as traders may sell off and take profits ahead of potential approval. Time will reveal whether his prediction holds true, especially considering the significant price surge in the 48 hours following his tweet. The ultimate impact of a Bitcoin ETF remains a topic of debate among investors and enthusiasts. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.